for this, press conference. We have with us Honorable Governor Shri Shaktikant Das, Deputy Governors Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri J. Swaminathan. Also with them are our senior colleagues, Dr. O.P. Mal, Executive Director, Dr. Rajiv Ranjan, Executive Director. So we'll begin the press conference with your opening remarks. So may I request you to do the opening remarks?
Good morning. Thank you all of you for being here. And I think in future, just governor will be better than honorable governor. So, okay, I would like to make a few observations to capture the essence of today's monetary policy. And I would like to make a few points. First, the years 2020 to 2023 will perhaps go down in history as a period of great volatility. Number two, India's GDP growth remains resilient and robust as reflected in our projection of 7% growth for the current year. Third, on the inflation front, the summer of 22 is behind us. We have made significant progress in bringing down inflation. The steady decline in core inflation indicates that monetary policy is working. But don't rush into any conclusion. Please wait for the next point. The fourth point is moving forward, inflation management cannot be on autopilot. The future path is expected to be clouded by uncertain food prices. CPI data for November is expected to be high. 5. The MPC will be highly alert to any signs of derailing of the ongoing disinflation process. Based on evolving situation, the MPC will take appropriate action to reach the 4% target. 6. Liquidity will be actively managed consistent with monetary policy. 7. The balance sheet of the financial sector remains robust. Sectoral and institution-specific signs of stress are being proactively monitored and addressed. We do not wait for the house to catch fire and then act. Prudence at all times is our guiding philosophy. 8. Current account deficit is expected to be modest and comfortably financed. 9. Foreign exchange reserves at $604 billion provide a strong buffer against global spillovers. 10. The stability of the Indian rupee reflects the improving macroeconomic fundamentals of the Indian economy and its resilience in the face of formidable global tsunamis. I'll stop here. Thank you.
Thank you, sir, for those opening
And what I
remarks.
propose to do is that, a copy of this we will just upload in our website so that it is easy for, all of you to do the reporting. Thank you.
Thank you, sir, for those opening remarks. Before we go ahead, may I request my media colleagues, please wait for your turn to be called out and restrict yourself to one question each. If time permits, then we'll go for another question. So I'll begin by inviting Mr. M. Govardhan Rangan from Economic Times to ask his question.
Good afternoon, Governor. This time, in terms of monetary policy, you have taken out all the surprises. It's kind of so more than what the market asked for. So we move to the next topic that you interest in terms of the financial stability. When you say that you won't wait for the house to catch fire. So last time you saw some smoke in unsecured loans and doused it. So which are the areas where you see smoke now, in the sense for you to say that you won't wait for the house to catch fire? Thanks.
You see, as a part of our supervision and as a part of our very close and proactive monitoring of the financial sector and individual financial institutions, our endeavor is always to remain up to date. We have deepened our supervisory methods. Our endeavor is also to use or try to use the smell test also. I have talked about it earlier. So whenever we smell any stress building up anywhere at the system level or at individual entity level, we deal with it in the appropriate way.
Uh, Yali, you are warning about the unsecured loans for quite some time before you acted. Is there any segment that where you feel there is a warning necessary now?
No, I cannot spell out. As and when something like that becomes necessary, we will act. At this point of time, as I have said in my statement today, that the balance sheet of the Indian financial sector continues to be robust. And all the financial parameters of NBFCs and banks at the system level as well as at individual level, they also continue to be well above the minimum regulatory parameters, whether it is in terms of capital adequacy or in terms of uh, provisioning for bad loans, or even on issues of even on the parameter of profitability.
Thank you, sir. I'll move on to Ms. Lata Venkatesh from CNBC TV.
Thank you, Yogesh. And thank you, Governor, for asking people to drop the word honorable. I think that's an extremely honorable statement to make. Thank you for that. So, questions. For the first time, you have used the words regulators should also be mindful of over tightening. Can we therefore expect the interbank call rate to come towards the repo rate of 6.5? It has been at 6.75 for the better part of a couple of months. On the issue of financial stability, you have just said that connected lending framework will be to strengthen the pricing and management of credit by banks. Does this mean that there will be a little more tightening? Will that be the net result of that framework? And just a doubt which comes on this connected
That is
lending.
the third question.
So it's connected to connected lending. When you announce the unsecured loans, was there a worry that bank loans are going to stock market? Because there was a report from Ashish Gupta that derivatives are now 400 times.
Okay.
Is there any fear that
You
this
see,
money is going there?
whatever was in our mind, we have spelled out. These are precautionary measures which we have taken. Our endeavor is always, our effort is always to act proactively before the, the bubble bursts, before the stress builds up. We act, our endeavor, our effort is always to act proactively. And I have stated very clearly that these are preemptive measures which we have said. Just hold on. And with regard to connected lending, I would request DG Rajeshwar Rao to please answer that question. And with regard to the other thing which you said about
mindful of over tightening.
that over tightening, we always take a balanced call. I would request DG Michael Patra to reply that. I will supplement thereafter if need be. So first DG Rajeshwar Rao and then DG Michael Patra.
Thank you, Governor. I think there is a bit of a misunderstanding between interconnectedness and connected lending. When we talk about connected lending, it's essentially the lending to persons who have the position to control or influence the decision of a lender. So it is in that context that this guideline on connected lending is being conceived of. Right now, the regulations vary between the regulated entities. There are scattered provisions. So in order to bring about uniformity in the process of these regulations, we are coming out with some draft guidelines which will help to clarify the position and have a uniformity in the regulatory approach to connected lending amongst all regulated entities.
If you've noticed, in the first few days of December, the call rate has already started gravitating towards the repo rate. And in fact, on the 4th or 5th, it was 6.45 sub-repo. And you will see that this is coincidental with government spending. Government balances have been coming down, and therefore, so the previous tightness was also associated with a buildup of balances. Okay, and on the over-tightening, I think I'll let the author.
You see, we have always tried to take a balanced call. And this is not the first time that we have said. What is our monetary policy as prescribed in the law? Primary target is price control in terms of maintaining 4% inflation, which I have emphasized. I have emphasized it very clearly in my statement that 4% is our target. I mentioned it again here in my opening remarks. And the law also requires that we have to keep in mind the objective of growth. Last year in May, we spelled out that when we shifted our focus from, when we shifted our focus and prioritized inflation over growth, that same approach continues. There is no change in that stance. It is to place things in the particular perspective. I have tried to explain the overall approach that central banks adopt, and in particular the approach that Reserve Bank has been approaching. Our decisions, as I have said, are dependent on two major parameters, that is inflation and growth. Inflation is our top priority now. We have still a distance to cover to reach 4%. So therefore, the use of the risk of over-tightening should be read along with the previous part, the previous sentence, where I think I have said that a few months of good data should not push us into some kind of a complacency. And the fact that inflation has come within the target range also should not lead to any kind of complacency. So a mention of the word over tightening should not be read as, it would be wrong to think or assume that a change of our approach, or that any kind of loosening etc. is round the corner. That's not on the table at the moment. Let me be very clear, it's not at all on the table. Look at the inflation numbers. We have said look at the inflation trajectory. So we still have a distance to cover.
Was the stock market exuberance one reason? Do you fear bank money going there?
No, I think that's a that's a very hypothetical question. There have been anecdotal write-ups, but we are mindful of all possible we are mindful of all possible risks building up. For stock markets, there is a stock market regulator. The stock market regulator, that is SEBI, monitors what is happening in the stock markets, and if there is something happening which is of concern to the SEBI, or it comes to the notice of SEBI, I am sure they will bring it to our notice.
Thank you, sirs. I'll move on to Mr. Ankur Mishra from ET Now to ask his question.
Sir, I want thank you, Yogesh sir. I want to draw your attention towards the announcement which was made in the last policy. You had warned about unsecured loans portfolio, and later on there was announcement from Reserve Bank of India. One, I want to understand that a few of the players have said that they are going slow on sub 50,000 or small ticket size loans. Did you see some problem there particularly? And another thing, NBFCs had also claimed to have reached out to you regarding the problem which will be arising out after the circular which you have issued. Is there some rethinking? Have you done some discussion?
Would you like to take that question?
Sure. Thank you, Governor. See, as it was mentioned while making that announcement itself, that it's a preemptive measure to bring certain prudence and to bring an end to any sort of exuberance that may be exhibited by certain lenders. And the effort was made over the previous 3-4 months by way of sensitizing the players to put adequate internal control measures to ensure that the risk buildup is avoided. As the market was not responding enough to that, there was necessity for, as we had mentioned earlier, that we watch the data, and basis the data, we have taken certain measure to strengthen the prudential measures that the regulated entities have to put in place. So it is too early to see or pass a conclusion as to what sort of effect it is taking, but at least from our interactions with the market participants, the financial system, as well as some of the articles, are alluding to the fact that there are risk management practices are getting better, underwriting is getting better, and any business model that is likely to throw up an enhanced risk is curtailed. So that is our intention. So it is not to curtail the growth, and we have taken care to exclude growth drivers, the segments like home loans or vehicle loans or to the small borrowers or to SHG. Those segments have been kept outside of this purview. So we would expect the lenders to conduct themselves and draw their business models in a manner in which an avoidable risk buildup is mitigated.
After your assessment, sorry, sir. After your assessment, is there also consideration, as I mentioned about NBFCs, that you are having some kind of discussion with problems which are faced?
See, essentially, these measures were intended to address the interconnectedness that was building up within the financial system, and also to curtail, because as we had highlighted, it was growing at about 24-25% on a year-on-year basis as compared to the rest of the system that was growing at about 12 to 14%. So that particular segment of bank lending to NBFC had to be kind of calibrated, so that we have tried doing it through the risk weight, and also the NBFC's growth in certain segments was an outlier. Again, that particular segment we have to add risk weight. So it's a kind of a prudential measure at this point in time. It is not to deny liquidity. It is not to ration the lending. It's only we would like the lenders to have adequate risk weights put in place, limits to be set in place for a prudential monitoring. That's all.
Thank you, sirs. I'll move on to this side, sir. Today, one TV channel has been launched, NDTV Profit. I'll request Vishwanath Nair to ask his question from there.
Thank you so much, Yogesh. Governor, first question. I mean, my point that I want to ask you is whether this 5 policies of no action and maintaining this withdrawal of accommodation stance, does that inadvertently communicate a neutral stance to the market? Because you are not neutral yet, but 5 policies of no action could indicate that.
That is 5 policies of no action
movement, and as well as maintaining the withdrawal of accommodation stance. Does that communicate a neutral stance to the market by any chance, that you are neutral on rates?
No, I don't know on what basis you are reaching that conclusion. We do not communicate anything inadvertently. Let me make it very clear. All our communication is carefully prepared. We are aware that, the markets and the media, you analyze each and every corner of the statement, the comma, full stop, everything. So we are very careful in our communication. There is no inadvertence in any of our communication. So if somebody is assuming that it's a signal to moving towards a neutral stance, I think it will be incorrect. It will not be correct at all. You see, you look at the inflation trajectory. We are still away from 4% target, and that is why and we have said that monetary policy continues to remain actively disinflationary. So therefore, one should not. It would be a mistake to read that we are giving any kind of signal towards a move. Any kind of a signal that we are moving towards neutral. That would be a wrong interpretation.
Thank you, sir. I'll invite Mr. Manojit Saha from Business Standard to ask his question.
Good afternoon, sir. Is RBI comfortable with a EMIR compliant MOU with ESMA? Does that addresses the concern of inspection, audit, and a possible penalty? Is RBI comfortable with that? And also one clarification. You didn't mention the word OMO this time. The sword was hanging.
Sorry?
You didn't mention the word OMO this time.
Okay.
The sword was hanging for the last 2 months. So can we assume that it's off the table now because liquidity has been tight? It's tight.
We have said, I'll take the OMO question, and with regard to the ESMA part, I will pass it on to Deputy Governor Ravi Shankar. We have not said that it is off the table. We have announced that in the last meeting. We have said that due to certain factors which are not in our control, it is very clearly mentioned in the statement, certain factors which are not in our control, like the demand for currency during the festival season, the buildup of cash balances in the government, which of course have now started coming down because government spending has picked up. There are certain factors which are beyond our control. And based on market movement, we also make market interventions which have impact on liquidity. All that I have said in the statement is that the need to deploy this instrument has not arisen. Beyond that, I have not said that it is off the table. That instrument remains very much on the table. That is always in Arjuna's quiver. It will be used if and when required, depending on the evolving liquidity conditions. I would request DG Ravi Shankar to take the other part of the question.
Thank you, sir. We believe these MOUs or agreements with respect to market infrastructure agencies like CCIL should be underpinned by the word that is used in their regulations, cooperation. There should be cooperation documents, cooperative documents. And in that respect, we believe that they should follow the principle of mutual respect, one, and principle of mutual trust. They should also be characterized by the principle of deference to local regulation. In other words, we are not comfortable with with regulations anywhere which are characterized by extraterritorial jurisdiction. So and the one we signed with the Bank of England, it's there on the website. You would have gone through. You would have noticed that the emphasis is on deference and cooperation.
Thank you, sirs. I'll move on to Mr. Shayan Ghosh from the Mint. That's it.
Hi, following your guidelines on risk weights.
A little louder.
Hi, following your guidelines on risk weights, a lot of lenders have decided to curtail smaller loans, as he also asked. But then, do you think that the sudden closure of the tap would affect that section of borrowers who were so far dependent on that? That's one. Second question, sir, is that there have been a lot of instances of cooperative bank, board changes recently, then ED raids and all that. So, as a regulator, how do you tackle the cases of corporate governance issues at the cooperative bank level? Thank you.
With regard to ED rates, etc., I cannot make any comment. It is, that's an independent autonomous body. But with regard to the other two components of your question, I would request DG Rajeshwar Rao and Swaminathan between themselves. You can, between the two DGs, you can take those questions.
I think the first point about the risk weights, I think this, as already mentioned, it's essentially a prudential measure to curb growth or moderate the credit growth in certain specific sectors. It is not tantamount to turning off the tap. The tap is open, but only thing maybe the pressure has been reduced a bit. So I don't think that is really the intention and not unlikely to be the outcome of the measure which we have actually announced. Now, coming to the governance issues, I think broadly we say that through the supervisory process, we have a close monitoring of the various parameters of the functioning of the regulated entities, which includes governance, business models, risk management, compliance, etc. So it is a package which monitors the entire functioning of these regulated entities. So if there are certain concerns about the regulated entity, insofar as governance is concerned, action would be, there would be an engagement with the concerned entity to take appropriate action as may be necessary. Mr. Swaminathan, if you would.
Thank you. Just to supplement on that, on this up to 50,000 category, to put a context to it, the composition of that particular segment is less than 0.5% of the total outstandings. So while, of course, it may be dealing with a lot of number of people, it's a segment that cannot pose a great risk on its own because the total quantum itself is less than 0.5%. That's in terms of the context part. The second is that we have, as I mentioned, that we have what we would like to curtail and expect the lending institutions to provide for more by way of additional risk weight is some of those consumption-led segments or unsecured credit which do not have a defined end use. We have taken care to exclude to support whatever growth drivers are already there. So whatever lending that was taking place for which a clear end use was not visible or completely unsecured without a clear purpose is what will get curtailed. Basis this, there will be some recalibration of business models, also recalibration of the growth numbers. That is what is the intended effect of the regulation. So if it is playing out, I think that is only giving the intended results. And as DG MRR clarified, it is not our intention to deny or ration credit. I think there are enough headrooms available. The exposure framework permits adequate lending to be provided for supporting the growth. And on the second part, again, to supplement on that, governance and effectiveness assurance function has been on top of our priority. So from a qualitative perspective, while of course quantitative parameters, the entire financial system looks very good at this point in time, what we would like to focus is on the qualitative parameters. So that is how you see it has always been a focus area, but you might hear us more on governance and the effectiveness of assurance functions, because we feel that strengthening of these two is what will ensure a continued stability of the financial system. So that's why the emphasis is. Thank you.
Thank you, sir. I'll request Ms. Shyama Mishra from Doordarshan to ask a question.
Hi, Governor. Are there any external factors that are looking promising for the Indian economy?
That are looking promising for the Indian economy. I think the major factor is that I think there is growing international confidence on India's economy. Our interaction with, interactions with my interactions with governors of other countries, our interaction with various other regulators and stakeholders and other investors in particular from other countries, major investors who visit India, and some of them do come to RBI and meet us. I think there is a growing confidence in the potential of Indian economy and India's capacity to grow. I think that is probably something which is which is really noteworthy. And with regard to that, also translates into another area, namely, I think confidence from the point of view of investment, making investment, confidence also from the point of view of, that is a kind of a confidence in the quality of Indian products, and more particularly the quality of India's services exports. There is a greater trust, confidence on the quality of our merchandise exports, on the quality of our services exports. That is the inherent quality and the strength of all that we are doing. Is there anything else you would like to add? That's it.
Thank you, sir. Moving on to this side, I'll request Mr. Anup Roy from Bloomberg to ask his question.
Thank you, sir. Sir, you are sounding very cautious about inflation, and previously you have said that we will not consider easing or think of easing before it settles around 4% on a sustainable basis. But going by the analysts, it is not going to happen before 2025. So are you going to keep rates elevated for this whole year, next year, or something else will prompt you to cut probably US Fed rate or something?
You see, specifically on the rates and the cut or etc., we have very explicitly stated, I have stated, and I think DG Michael Patra has also stated, we refrain from giving any forward guidance, considering that with the kind of uncertainty that lies ahead of us. And in my concluding para of my statement, I have said that the future looks very fickle. And I have also said that new shocks can hit any economy. It can come from anywhere and hit any economy anytime. So if that is the level of uncertainty, and if our inflation is still quite away from 4%, we just cannot give any forward guidance about whether we will tighten further or we will loosen or what we will do. Everything depends on the evolving situation. It is not possible in the current situation for anyone, any central bank, to give a forward guidance. You would have seen that the level of forward guidance also given by many central banks internationally have, now sort of have come down.
Thank you, sir. Thank you, sir. I'll move on to his right. I'll invite Mr. Roisuke Hanada from Nikkei Asia to ask his question.
I want to ask about the general assessment of the Indian economy. As everyone aware, the latest GDP statistics show the robust growth. However, at the same time, some private institute reported that the jobless rate temporarily recorded over 10% in October. I understand it's not the government official statistic, but what do you think about the current and future expectation regarding the employment environment in India?
We have analyzed all these aspects in great detail internally. I would request DG Michael Patra to please take that question.
There are now very credible official statistics on employment. So I will refer you to the periodic labor force survey, which is put out by the Government of India. That has been conducted since April 2017. So you have a consistent series right from 2017 July. And if you look at those data, which are available right up to September 2023, you get the labor participation rate, the worker to population ratio, that is the amount of employed people in the population, and also the unemployment rates, not only for the country as a whole, but for women and men, and also for urban and rural areas. So if you see the labor participation rate, it is at its highest level ever. People wanting to or seeking work. And as regards the unemployment rate, it has fallen to 6.6%, not 10%. And that is probably the lowest in the series right now. Thank you.
Thank you, sir. I'll invite Mr. Piyush Shukla from Financial Express to ask his question.
Good afternoon, Governor. Good afternoon, DGs. Sir, the transmission of your rate hikes done through the last year and this year, it's not reflecting in large banks' savings account deposits. So what are we doing about that? Like Lata ma'am said, a lot of people are parking money as well in mutual funds. So small banks are not able to register any growth in their CASA, minuscule, single digit, lower single digit. So what's actually happening there? And secondly, sir, the willful defaulter circular which you've asked banks to apply within 6 months, there's a representation I hear made by IBA to extend the timeline to 1 year. So any update on that? Thank you.
The first part related to
transmission on savings rate of large banks.
Okay. Now, with regard to the transmission of rates, that information I have provided, the numbers I have provided in a footnote to the statement. It's there. You might have already noticed it. You are talking about the savings and savings
yes.
bank interest rates. You also referred to more and more money is going into mutual funds. Now, that is the function of the economy. That is the function of the market. And that is a decision which each individual has to take where he wants to put his money, how much money he wants to keep in banks, how much money he wants to put in mutual funds, where all he is going to deploy his money or his savings. So we cannot really, have anything. I would not like to say anything on that. With regard to savings bank interest rates, you are right. They haven't seen much increase. But as you would appreciate, the interest rates are deregulated, and any sort of introduction of any kind of administered rate for any component of bank deposits would be a very retrograde step. So we have no such ideas. It's a commercial decision which the banks have to do. At times, you would have noticed several banks also do increase their savings, savings account interest rates, because depending on their own liquidity assessment or depending on their own assessment of their own requirement and the balance sheet. So it's a decision which is left to the banks to take. So far as RBI is concerned, the interest rates, as you are aware, are deregulated.
I can comment on the willful defaulter.
Yes, on the willful defaulter.
On the willful defaulter case, representation, if I may say so, the entire draft circular has been put in public domain for comments. We have received feedback on the circular, and we are in the process of analyzing them before we refine and finalize the circular. So this feedback also will be factored in while taking a final decision on the circular.
When will final circular come, sir?
No, we are just in the process of analyzing, so shortly.
Thank you, sirs. I'll move on to the left. Mr. Mayur Shetty from the Times of India.
Thank you, Yogesh. Governor, I wanted to know the thinking behind the announcement on the RBI providing cloud services. Is this an extension of the principle of data sovereignty and asking payment companies to have on-soil storage of data? And I had another question on growth. What makes you so confident of growth given all the commentary that we are hearing on sluggish private investments, uncertain rural demand, and slowing import demand also?
Well, this question I was anticipating this question, but I was wondering why it has not been asked. But on the cloud part, I would request DG Ravi Shankar to reply. And why we are setting it up, we have already explained, but let DG Ravi Shankar take that part of the question. And about our confidence with regard to the growth, let DG Michael Patra reply. I'll supplement if required.
Data is increasing, data storage, data processing. So efficiency is a major issue there. And currently, there is this data is sometimes kept in house on premises, sometimes in other clouds. We thought the basic driver behind this is to provide a structured, scalable data, storage and data processing facility, which is why the cloud has been thought about. The idea is to ensure security, integrity, and safety of data. It has got nothing to do with data sovereignty that you have referred to. What services will be provided, and all will be determined in the course of time. Whether it will be infrastructure as a service, which is a storage, or whether it will be platforms that will be provided, whether it will be software that will be provided. Especially for smaller entities, cooperative banks and those things. This provides a lot of efficiency in terms of scale, because for each one to maintain their database and all that would involve a large amount of investment, skill, and all that, which this cloud is expected to provide. This cloud will be owned by financial sector entities, as we have clarified, going forward. At this point of time, our idea is to just give it a push, let it start out, and then let the system manage. Like a digital public infrastructure. It's like a digital public infrastructure. No, we have said that at this point of time, IFTAS will create it and run it. Going forward, it will change.
Yeah, on the growth part, you can.
Yeah. So, as you know, the first half's estimates have beaten all estimates, including ours. And if you just sort of put that actual number and the projections we made in the last policy together, you'll come with number close to 7 or at 7. 6.8, so 6.9. Thank you. But if you look at October-November data, the high-frequency data which we use for our nowcasts, they are all very robust right now. So if you just take October-November data, you'll exceed 7. So at the current time, 7 is like a conservative estimate.